afternoon, everybody, and welcome to a Saturday version of the South Florida Tribune Broadcasting Network. We are on the South Florida Tribune podcast, and I'm joined here today by a special guest in the studio, my life insurance associate, Jason Mathis. And Jason, welcome to the big show.
Thank you, Scott. I really appreciate you having me on today and getting this good information out there to the people.
Been a dream for me to have an opportunity to do something in my comfort zone, not yours, broadcasting. Then again, you know, when you have a mouth like mine, you're trying to use it numerous different ways. Haven't done anything on the insurance side yet. That's not to say at some point that we won't do it, but the reality is we have some business to take care of. While everybody in their right mind is watching college football today, you and I aren't in our right mind, and we're doing something about insurance, but guess what? It's something that helps a lot of people out. So here we are, Jason.
Scott, you know, I'm super passionate about what we do, and I work for a company we call ourselves the Alliance, National Agents Alliance. We are a group of agents all across America that really goes out there, and what we really do, Scott, we really protect Americans' financial future through different programs that we have. I mean, just to give you kind of a big picture, 30,000-foot kind of view, we help people maximize their retirement, protect their retirement, start a retirement. We also do all types of life insurance products, from term life, whole life, annuities. We also have an awesome debt reduction product program for people out there who have gotten themselves into a situation where, especially with the unsecured credit card debt problem out there across America. We also do Medicare and Medicare Advantage programs and really help people protect themselves against the loss of a loved one. And people are living longer now. So people are living longer now, and they need something for income when they retire, so they can live the way they want to live. We have a bunch of great products for that. I'd love to get into some specifics with you during the show today to talk about some of these awesome products that we have and what they can do, and maybe some real life examples.
We're going to have the opportunity to do so. But for those individuals that want to acquire more information about the products, I'll put my phone number out there. We'll do it 2 or 3 times during the course of the broadcast. My number, in case you need to get a hold of myself or Jason Mathis, that number is 954-304-4941, 954-304-4941. If you figure that you're going to go deaf hearing that number, you'll get it another couple more times during the course of the broadcast. With that said, okay, Jason, let's talk about area number 1 to educate everybody. Go ahead.
We've got this product. I absolutely love it. It's incredible. It doesn't even sound real, Scott. When I'm going to tell you how this product works, it doesn't sound real. So here's how it works. If I was to tell you that we had a product that for every $1 you gave me, I gave you $2 back, does that sound even that it's possible?
So the automatic question, Jason, that people are going to say, is it too good to be true?
Yeah, and I'm telling you, that's something that we actually face out there in the marketplace, because it does sound too good to be true, and people have a tough time. We recently sat down with a client, and they said, Jason, Warren Buffett doesn't even make these kind of returns. You're telling me if I give you $100 every month, you're going to give me $200. And I'm like, absolutely, yes, this is how this program works. Let me tell you how it works, Scott.
Okay.
Now, I think a lot of people out there are familiar with the what they call the health savings account. Now, this is the account a lot of people are familiar with. W-2 employee, they're out there working for a big employer, corporate America. And the health savings account, you're basically able to take some of your money out of your check, and it goes into an account, and let's say you're saving $1,000 a year into that account, and you're able to use that account on medical expenses. You can buy glasses, you can prepay a lot of different, what they call 213 D as in David, health expenses with it. And it's awesome. It's an awesome account. It works really well. It saves you money. Basically what it does in a nutshell is it saves you the tax burden, whatever your tax bracket is. So if you put $1,000 in the account per year, and let's say, to make the math easy, your tax bracket is a 20% tax bracket, okay?
Okay.
And you spend the $1,000, you just save $200.
Really?
Yes, it's an awesome account. Now that's a good account. If you have options of that, you should look at it. But here's a better account that you could do. We call it the HMA, the Health Matching Account. And here's how it works. I'm going to give you an example of this account. This is a real life example. We recently did this with a client, and this is our actual favorite account that we do. So you pay $140 a month, Scott, for 35 months. Okay. Now you're able to make withdrawals out of this account through the course of time, but we're just going to say you put $140 a month for 35 months. Well, 140 times 35, Scott, is $4,900. And what your health matching account does is, boom, the company you put it with, they immediately say your account balance is now $10,000. It's actually double the money. It's more than double the money because you've put in $4,900 and now you've got $10,000 in there. Okay? Gotcha. Now, here's the catch. Here's the trick. Here's the thing. You cannot go out, Scott, and buy a big new flat screen TV with this money. It's health related. You have to spend it on what we call 213D, as in David, expenses. Now, these are some of the expenses: ambulance services, laboratory, medical, dental, hospital equipment and supplies, anything that may be not covered by your insurance, this will pay for. Doctors not elsewhere classified, dentist, okay, chiropractors, optometrists. And here's the other thing too, Scott, any nip and tuck you want done. You want to get this nip, that tuck, LASIK surgery not covered. Let's say you want to get a cosmetic surgery that's not covered by your job's health insurance. You can put money into this account, 35 months, you got $10,000 in there. Let's say your son needs LASIK or your wife wants some kind of augmentation. You can go ahead and pay for it with this account here. Medical, dental, co-pays. Let's say you have to go see a specialist for $100. You can use this card and pay for it. So what does that mean? That means you're cutting your out-of-pocket expense in half. Because remember, they double your money. So it's absolutely, hearing aids are covered, optical goods and eyeglasses, counseling services, any 213D as in David medical expenses are covered. Let me give you another example real quick. If you put in $198 a month for 35 months, after 35 months you've put in $6,930. Now you can spend $15,000 on the 213D as in David expenses. This has come out with the Obamacare and whatnot. This is a thing with the Obamacare, they have increased what they call the first dollar out-of-pocket expenses for the public. So this is a way for the public to cut in half their expenses. So it's an absolutely wonderful account. Here's another example: the health savings account versus your health matching account. Let's say you have out-of-pocket expenses of $4,900 on your health savings account. The net benefit you get from that is the $4,900. Okay, you spend it, you go out and use it, you have $1,300 as a remaining balance. Okay, with the health matching account, you spend the $4,900 and you have $6,400 left in that account. So it's truly, you give me $140 a month for 35 months. And then after 35 months, you've got over double your money in the account. It's an awesome product.
So if I'm reading this correctly, Jason, okay, you're talking about elective procedures as well as auxiliary necessities. Is that correct?
That is correct.
Yeah, because a lot of times insurance companies don't want to go ahead and spend money on things that they don't have to. We all know, especially in the medical industry, as regulated is they'll try to get out the best they can unless their hand is forced. But in this particular case, tell me, Jason, does this product compare to Aflac, or is it a bit higher, or does it even compare to it?
Well, the Aflac product, it compares to it because we pay for any 213D expenses, and Aflac's, a lot of their products are the same way. They also have income you can get from those, so they do a little bit different. But it's very, very similar because you're putting money in for a rainy day, and then when you need it, you can get it. Now, what this is designed for, it's designed for people. You wouldn't put into this account $725 a month unless you needed to spend $60,000 in the next 3.5 years. So let's say you needed some type of elective surgery that was really, really expensive and not covered by your insurance. Then this would be, so let's say the procedure costs $60,000, but you don't need it right away. Perfect example. Let's say someone needed a hip replacement or whatever they needed done. It was very, very expensive, not covered, or they maybe don't have insurance, but they know they're going to need it. They could put $725 a month for 35 months into this account, have $60,000. Let's say that surgery is a $30,000 surgery. They swipe it's on a Visa debit card and makes it super easy to pay. Here's the other thing too, Scott, that's absolutely amazing with the health savings account versus the health matching account. The health matching account's a lot better. With the health savings account, you have to save your receipts. You turn them in at the end of the year. How many people don't save their receipts? It's a pain.
Right,
you ever deal
right.
with the government? Try to get something back from them. It's an absolute pain. This way it's done by the Visa debit. It's all done on the back end through the computer system. It's super, super easy to redeem these points and these credits and the dollars that you put in.
So my question to you is, Andy Albright has done every insurance product imaginable. Why would he get into something like this, Jason?
Here's the thing, Scott. There's a huge need. What we do is we save families we help protect people's financial future with these products. So this is an absolute product. It's brand new to the market. It's only been out, we're talking months it's been out there, and people need to know about it. Like, we've got to it's my job, the Alliance's job, to spread the good word about these new financial tools. Here's the deal. 100 years ago, 75 years ago, a car was made, and that car didn't have air conditioning. It didn't have a belt to strap kids in, so strap yourself. It didn't have airbags. As cars have gotten better, as time has gone by, guess what? So have financial products, and we're out there to get the word out about some of these awesome products. So it's unbelievable. One of our other products I'd like to talk about, if you got a minute.
Oh, we got another 40 of them, so get to as many as you can while here on the broadcast.
All right. We have a product that's been out there for a while, probably 20 years, 25 years. It's called an IUL, an Index Universal Life Policy. And what this is what, as the financial people who develop these products have gotten smarter over the years, what they've done is they've taken a term life product and a whole life product. Term life product only good for so many years. A whole life product's good for your whole life, builds cash value. So they said, hey, look, let's take those two products, mash them together, and we're going to call it an Index Universal Life Insurance Policy. And what this policy does is not only does it, mom and dad give them security in case the death of one of them, but it also builds massive cash value for your retirement. You can set these products up to where they build cash value for retirement. Now, typically, the trick, the thing that people got to understand is it takes about 10 years for these products to bake financially. It's just like a cake, Scott. If you put a cake in the oven and the recipe calls for an hour and 45 minutes, you're not going to put it in there for an hour. It's just not going to be done. And what I'd like to tell people is compounding interest. When you learned about it in high school and junior high, it works. So over time, it will give this product the power of that interest. Now here's the other great thing about it that I love. It's super, super, super safe. Now, we all know what happened in 2007, 8, and 9, the Great Recession. Everybody's 401k turned into a 201k. So here you are, you're going to retire in a couple of years, 5 years, 10 years, and all of a sudden, you wake up, it's 2008, you look at your 401k statement, and it's dropped by 30, 40, 50%. And Scott, that happened to millions and millions of Americans across the whole country. The great thing about the IUL is it's tagged to the stock market. The stock market can do three things. It can go up, it can stay even, or it can go down. With the IUL, your only options are two options. And if we could get rid of one of the three options, which one, Scott, would you get rid of?
The high risky one.
You'd get rid of the losing money, right?
Right, exactly.
So you'd say, look, Jason, I don't want to lose any money. Can you guarantee me that? And with this IUL, yes, we can. Absolute 100% can't lose any money. Now here's the trick. Like, I want a product that does all three. Always makes money, doesn't stay even, and never can lose money. I'd like to get rid of two of the three, but guess what? It's not out there. They haven't developed it. We don't live in a land of unicorns and fairy tales. Okay? This is the real world. So this particular product, when you set it up, the way they make money is, let's say the stock market goes up 10%. You might only get 8% of that gain. Okay? So let's say the stock market goes up 10%, you only get 8%.